Hello, my name is Roger Lemaitre. I'm the President and CEO of UEX Corporation, and I'd like to thank you for attending our third webinar. We'll get started here, and of course, if you're not here and not live, we'll be posting this on our website later, probably later on this afternoon. We will be discussing our 2019 sort of results and our plans for the upcoming winter programs. You will have all the opportunity to ask questions here, but I'd ask that you put them at the end. You'll see at the very top of the your login here, there's a Q&A tab. If you click on that, type your questions anytime, but I probably won't be responding to questions until the very end of the presentation. I'd like to thank you once again for your time. I know it's a really busy stretch for you guys to be doing this around lunchtime in the East, and of course early in the morning in the West here. But with that, I'd like you to watch over our presentation, submit your questions, and we'll try to explain to you how we're going to be unearthing energy metals and why we control the premier Athabasca uranium and cobalt portfolio. So we will be doing some forward-looking statements, so we will be relying upon forward-looking statements, so please review this while you have the opportunity. What is UEX's competitive advantage? It really comes down to four key things. Our location, where all of our projects are located in the Athabasca Basin in northern Saskatchewan. Saskatchewan's the number 3 uranium investment jurisdiction, number 3 mining investment jurisdiction in the world. It's number 1 in terms of policy, according to the Fraser Institute. Our team, while small, have over 100 years of experience, not just exploring in the Athabasca Basin, but actually finding things and actually things that are actually being mined. We have an amazing portfolio. We have over 20 projects in our portfolio, ranging from projects that are ready to move forward in development stages through to pure grassroots projects. But probably what the sweet spot that we have in our portfolio is that mid-range, mid-stage, and even brownfields type projects, which we have dozens of targets in our portfolio. So one of the advantages of that portfolio is that when uranium prices do decide they're going to move in a positive direction, UEX investors are going to be, and shareholders are going to be, leveraged to that rise in uranium price because of our portfolio of advanced projects. The advantage we have over some other development companies is that there's a real opportunity to find additional deposits and grow our resources based on our mid-stage and grassroots portfolio. And of course, we have a unique knowledge when it comes to cobalt deposits in the Athabasca Basin. Nobody else knows what we know, and we think we can turn the Athabasca Basin not only to a world-class uranium district, which it already is, but into an emerging and important cobalt district as well. So with that, we'll discuss a little bit of our portfolio of opportunities. We'll start on the uranium side of things, where we own 10 uranium deposits, just under 100 million pounds of resources, and a huge, almost 290,000 hectares of mineral rights across the Northern Saskatchewan area. We have, but before we do that, we'll probably talk a little bit about where uranium markets are going. It's been 2019 has definitely been a challenging year for uranium investors and the uranium industry. And since the 2011 incident in Japan, the markets have always been in a bit of a tug of war, putting producers against utilities. And that through 2019, with what's happened with the Section 232 petition starting late last year, which has been extended through this nuclear fuels working group, has put the entire industry in sort of a hiatus in terms of suppliers looking to try to sell pounds, but don't want to sell them in the tougher markets. Utilities deciding that, well, we need to find out what's going to happen with the new rules, because the uranium markets could essentially be restructured or nothing happening at all. And we're still waiting that decision. Quite frankly, it's put a very difficult 2019 together for all industry participants on both sides of this tug of war. However, one of the things that, in my 20 years in the uranium industry is, I think we're seeing the recognition of the value of that nuclear power growing in a way that hasn't really been recognized in the past. And it's all predicated on the fact that global carbon emissions, despite almost 30 years of UN, IPCC work, they're still increasing, no matter what anyone would like to see happen. And probably more than anything else, people who are scientists are starting to realize that nuclear is a necessary component to lowering carbon emissions because of its low carbon emission life cycle. While everyone says, oh, we can replace all power sources with renewables, that's not true. And I think those people are starting to realize that renewables, because of their intermittent nature, when the sun's not shining, the wind's not blowing, are often backed up by other power sources. And more often than not, it's fossil fuels. So you're getting cleaner electricity when the wind is blowing and the sun is shining, but actually half the time when it's not, you're emitting even more dirty carbon electricity. And because of that, former opponents of nuclear power are beginning to change their minds. And I think, especially in the last 6 months this year, you've seen a lot of push on climate change globally. And I think this is one of the things that's helping push that sort of change in the value of the recognition of nuclear power. Down in the United States, where we've had a lot of news over the last couple of years, have been about premature closures of nuclear reactors. 6 of the 6 states that were at risk of seeing premature closures have enacted legislation that essentially balances electricity markets and puts nuclear back on a level playing field with all the other power sources. And that's helping save these nuclear power plants because these states are recognized in the value of the zero carbon emissions. I think 2019 was a seminal year for the industry. The Japanese pothole that occurred in 2011 when all of their reactors were shut down has been filled by actual nuclear new builds. In the last 6 years, there's been 42 nuclear reactors put into operation from construction point of view. And right now there's 55 reactors under construction. So real nuclear growth is underway, even after the Fukushima incident. And that's the fastest pace of growth in the nuclear fleet since the 1970s. And going back and saying, well, talking about that change in recognition, I think people are starting to realize, scientists realize that, well, wind, solar, nuclear, hydroelectric on a life cycle basis, that's from mine cradle to grave, and all the things that are needed to make those kilowatt hours happen. Nuclear is very, very competitive wind and solar. But you can see that when wind and solar aren't working, what are they backing it up with? Natural gas, coal, in some cases lignite. So you're not actually doing the world a favor by removing nuclear out of the energy mix, because when adding more wind or solar, if you're using natural gas, oil, coal, lignite as your backup. And essentially more wind and solar means more natural gas. And while natural gas plants will try to tell you, oh, we're cleaner. Sure, it's cleaner than oil, cleaner than coal, cleaner than lignite, but certainly a lot dirtier than your alternatives, particularly nuclear. And this is highlighted in Germany, where over the last decade and a half, they've undergone a very ambitious process of trying to transition their entire electrical supply into a renewable source. And there's been 160 billion euros invested over that period of time. Renewables now constitute 27% of the electrical grid there, but actually 55% of the capacity of the entire grid. And that tells you that renewables are if they were cost effective and reliable in terms of source supply, there would be more than 27% electricity being generated. So half the time, those renewables aren't working. At the meantime, electricity prices have increased dramatically by 50% over that time period in Germany. And so they have some of the highest electricity costs in all of Europe. And why? Because essentially they've decided they're going to remove nuclear from the power. You can look at the bottom right figure there. Black is the nuclear power component of their electricity generation. It's dropped off dramatically. You notice that your high emitters, your lignites, your coals, and your natural gases have remained relatively steady in terms of capacity. And blue and yellows are your solar and wind, and then there's wind offshore. They've become a bigger component, but yet CO2 emissions remain exactly the same as 2015 or 2005 levels. And so a huge investment, but not any improvement in the amount of CO2 emissions being done. And that's just not possible without more non-carbon sources such as nuclear and solar and hydro. Meanwhile, next door in France, where there's 72% nuclear, electricity is substantially cheaper and they have much cleaner air. So nuclear, especially as a base load source electricity, is really, really critical to seeing cleaner energy. However, the uranium that isn't short term hasn't been helping the uranium industry. There are a handful of things coming that should at least change the dynamics and return things back to, I wouldn't say normal, but to at least a real market. Once we receive in the next couple of weeks the Nuclear Fuel Working Group's report, we're hoping that we'll see a restoration of actual real uranium market that's disappeared over the last year and a half as people await the decision and the possible change in the structure of what could happen in the uranium markets. We filled the pothole. In the West, there's been a lot of news around the establishment of designs about small modular reactors that will be helpful in growing nuclear power in remote areas. Producers have finally responded to those oversupply with production cuts, but the price can't remain below the cost of production forever. When your Kazan and Proms and Cameco's of the world aren't making money, they can't do this forever. They're the lowest cost producers, and the whole industry can't lose money forever and expect that the production will still be there. And once you've seen change in 2019, particularly groups like Kazan and Prom are not feeding the spot market with pounds just to get sort of production over quality, quantity over quality. They're showing quality, and they'll be showing some discipline. So Kazan and Prom's come out and said publicly that they're not going to be increasing production when the lowest cost mines in the world aren't making money. So it's in their interest to restrict supply. Market supply over the last year has actually fallen into a shortfall, and utilities are sort of feasting off of some of the small amount of overhang of supply that's in the market. But at a 50 million pound a year shortfall, as uranium demand in 2019 is expected to be about 190 million pounds, and production's in the 137 million pound range, that overhang is going to disappear pretty quickly. Meanwhile, there's no investment happening in growing uranium supply, and it takes almost 10 years to put a mine in production again. To me, this is exactly the same kind of scenario we saw in 2004 when the market was ready to move. So how does that help the UEX investor? Well, we'll talk about our 4 key projects that we're working on right now. Currently, we're out on our Hidden Bay project drilling some holes just south of the MacLean Lake operation in our MacLean South area. It's an area that, on our Hidden Bay project, from top to bottom, has been explored for classic unconformity deposits, both, probably mostly before our time as a property owner, but some a little bit afterwards. It's the shallowest cover in the basin. You got roads, power lines crossing, everything else. And what's exciting about it is that while there's lots of sniffs of mineralization and alteration in the unconformity environment, the basement environment where we're finding the new style deposits has barely been touched for exploration. We've identified over the summer and proven up well over a dozen drill-ready targets. But I'd like to talk to you a little bit about what we're doing on what is really unique for Uranium Junior Company is to actually have a true brownfields exploration target. Brownfields are targets that are right up against adjacent mines. So zooming into the MacLean South area, you can see there in orange is the property boundary where Hidden Bay and UEX's property is to the south, and the MacLean Lake Arano mine operation is to the north. And on the north, you can see the open pits and waste piles around to the Sioux open pits, the 5 uranium deposits that occur over about a 1.7 kilometer long trend. That the most southernmost, which is Sioux E, and it ends literally right at the property boundary. And over the years, both predecessor companies and UEX have explored along the Sioux Fault trend, looking for extensions of the mineralized deposits, because we know these deposits like to form trends, pearls on a string sort of scenario, and we haven't been able to find it along the Sioux Fault. Meanwhile, to the west, there's another structure called the Telephone Fault, and you can see by the little red stars there, we found mineralization all over that trend. Unfortunately, we haven't been able to grow it along strike, along in the direction of the Telephone Fault trends. But yet we're getting sniffs of mineralization. We do know that the Sioux deposits have an influence with east-west structures, and where those east-west structures intersect the main Sioux Fault trend, that's where we're getting the best grades. And so we'd love to come in there and do some more geophysics work that would help us, say resistivity, that would help us refine potential alteration zones that occur between the Telephone and Sioux Faults, but because of the culture, the mine culture of the power lines, that's been really difficult. So this summer we went and did a radon survey, and the idea is that radon emanates off of uranium deposits and can maybe be detected in the subsurface or just in the surface environment using radon detectors. So one of the things that we struggle with is that we know that the uranium deposits, as we know them, end right at the property boundary, and that's just odd. We also know that north of the property boundary, the Sioux Fault trend sees a large offset of the sandstone unconformity with the basement rocks. Significant offset to the north, but when it crosses over to our property boundary, it actually dies off in a really small offset. Where on the telephone fault, the converse is true. The telephone fault, we're seeing significant offset on our side of the property boundary. When it crosses over onto the Uranos side, it disappears. And that just is, it's a little bit odd. It tells us something that we know that the block of rock that follows east of the Sioux deposits and across the property boundary and east of the telephone fault all moves together because there's no offset of the unconformity when the rocks were being squeezed in an east-west direction, as you can see by the arrows. And you also know that west of the Sioux deposits and west of the MacLean Lake dome on our side of the property boundary, that all moves as one block because that's where the offsets are. So why do we think that this is important? Well, in order for that to happen, we believe there's got to be cross faults. And we think those cross faults might link up to those little sniffs of mineralization we have along the telephone fault. And that's why we conducted the radon survey over that area to see if we can detect those cross-cutting faults. Why do we think there's cross-cutting faults at play? As we said, we know that the area west of the Sioux deposits has to form is all moving as one block, like we're hand positioned there. And if you try to squeeze that in the direction, any way you try to squeeze it, there's absolutely no way you can make offset a telephone end at the property boundary and offset at the Sioux Fault end of the telephone boundary unless you put together a cross fault like this. And then when you try to squeeze those rocks, look what happens. You actually get the offset we're speaking of. Those cross-cutting fault structures in places like Cameco's Eagle Point operations are where the high-grade deposits are found. So zooming into the MacLean Lake South radon survey area right across the boundary, you can see there's several anomalous areas of radon that have been detected. We've gone back to the old geophysics done in pre-1982, and we've been able to find geophysical inferred east-west fault structures, some of which come up against those telephone-hosted mineral uranium showings. And we're actively going out there and drilling those anomalies where they're coincident with those structures to look for Eagle Point style mineralization. And so this little white inlay here is actually a roughly to scale footprint of the Eagle Point deposits from Cameco's Eagle Point or Eagle Point Rabbit Lake operation. And you can end with the dashed line being the main Collins Bay fault or the equivalent to the telephone fault structure. And you can see that several of these deposits, some of the most important economically deposits at Eagle Point, follow the same structural direction, and they're located between those structures, and that's what we're targeting. We're hoping to find with this particular program. Right now, we're just starting our second hole of a 2,100 meter drill program, and we hope to have that finished up before the end of the month. Moving on in the portfolio, you would have seen recently we announced some results from our Christie Lake uranium project, where we've got a modest resource that we're looking to grow. We focused most of the last 3 years worth of work inside the deposit areas of Kenpen, Paul Bay, and Aurora, and made the Aurora discovery. We just announced our first sniff of mineralization outside the deposit area in our 14-hole summer drill program. So zooming in a little bit, that was the figure from the press release. We had the mineralization 1.17% to U308 over, or EU308 over 1.9 meters just below the unconformity. We targeted 4 areas with our program, and we found that 3 of them need additional, and they become higher priority targets from this program. The first was that new mineralization in CB141 along the B trend, along strike of another sniff of lower grade mineralization. We found just to the south of that B trend where the conductor coverage dies, where coincident with the winter resistivity anomaly, a second area of highly anomalous sandstone uranium geochemistry and alteration that will definitely need to be followed up. And we were able to confirm that the Aurora system was cut off and offset in a northwesterly direction. And that resistivity anomaly will require additional work to the northwest this winter. We're going to, because of the extent of the confusion around the alteration system, we're going to follow that up first with a small electromagnetic survey to help us refine the targeting in that resistivity area this winter. The area that didn't get necessarily better, but certainly wasn't negative results, was the area southwest of Paul Bay, where we've actually found there are 2 structures that we can follow up on, although they're probably not as high priority as those other 3 areas. This summer, we also did a bunch of work in the southwest part of the basin on reviewing the Shea Creek deposits. They're part of our Western Athabasca joint venture with Uranium. We own 49.1% roughly of the Shea Creek deposits. Uranium owns the balance. And what we've been telling them, our shareholders, is that we believe that the footprint of those deposits is wide open for expansion, particularly in the north end under Colette, where we're seeing mineralized holes that were similar to what we see at Kiana, 58B, and some of the areas of Ann that have not yet been followed up in the basement in that down plunge direction. And so we were out this year looking at those, the core, looking for those opportunities, confirming what we might see on paper. And one of the areas you see on the right-hand side of that slide is the green fault structure, where we actually connect up mineralized holes, and it's clearly open towards the viewer's side here, or down to the west. But we've also identified, just off the top, other areas where exactly the same scenario exists. And so we're going to be working with our partner Uranium here in May to sort of plan a program that we can implement that would help us probably in 2021 to grow the footprint of those deposits and grow the resource space at Shea Creek in a significant way. Shifting gears a little bit to our cobalt portfolio. As you know, we have one of the few, if not the only, primary Canadian cobalt resource at a very low discovery cost, and we put substantial effort into the winter program here to grow the deposit and have grown that deposit significantly to the west. But first, looking at the cobalt markets, a lot of noise in the cobalt markets this time last year, people not really sure where things were going, a lot of conflicting and obviously accurate information out there. What I can say about the cobalt markets is that they're very much tied to electrical vehicle growth in markets. And what we're seeing over the year is a rapid jumping into the space of automakers. So your automakers are jumping in and forming alliances with battery makers and cathode makers. So VW, Northvolt, and Dalmar, and the Chinese company Contemporary Ampere Technologies Limited, building gigafactory plants. BMW working with chemical companies Samsung and BASF to secure ethically sourced cobalt. VW and deciding they're going to be essentially fully electric within the decade, and Mercedes talking in 2026 abandoning all development of their internal combustion engines. These companies are making big bets that EVs are going to become a bigger part of the market. Meanwhile, on the supply side, the DRC's mines were forecasting huge output, and that would more than take up for the supply shortfall that was perceived by growth in cobalt demand because of electric batteries. And we've seen that that's not actually true. The Katanga operation that Glencore was putting together ramp up has gone far slower than expected, with a lot of technical issues. And they've actually shut down 20% of the world's supply by shutting down the Dermatana mine here at the end of the year. So suddenly a world that was in cobalt surplus is no longer in surplus anymore. And yet demand is still going to double by 2026. Some of the things that we have seen about in cobalt markets is to talk about engineering cobalt out of batteries. I think that concept has been put to bed. It's not going to happen. There may be reduced cobalt per battery itself, but with more batteries being built for the more EVs out there, cobalt demand is still going to skyrocket. And that's because the gigafactory construction pace is just unbelievable. When you think back to 2015, when Tesla built the world's very first gigafactory, which is a factory that makes EV batteries, that was the first one. And now we're going to go from a very small base in 2015 to by 2029 and 1 terawatts of annual capacity building these batteries. 300 megawatts, almost 30% of that's been announced in new construction projects this year. And as you can see here, according to Benchmark Minerals, over 100 lithium-ion batteries factors are being in the pipeline here, mostly in China. I think the West, Europe, and the United States have woken up to the fact that they're actually in an EV arms race with China, with who controls these strategic metals and battery component making technology to power the next generation of automobiles. So where does Westberg fit in? Well, we're the only primary cobalt deposit in Canada, meaning that cobalt is the primary commodity, not a byproduct commodity. It's a new type of deposit that's never been recognized before or even explored for. We're finding that we're identifying lots of opportunities in the eastern, or not just the eastern Athabasca Basin, but the Athabasca Basin in general, to find more of these cobalt deposits. And we're learning about where they form, how they form, and using our leveraging off our knowledge of the geology in the Athabasca Basin is proving to be really valuable. We did expand the deposit in 2019. I don't think we're yet ready to start considering a mining operation. We do believe we've done a proof of concept that we can find these things, we know what to look for, and we can turn the Athabasca Basin into a emerging cobalt district. Winter results, you can see purple was where we started with the 3 million pound resource. We're growing the resource to that purpley orange area, and we did see some high grade results. We're in the process of putting together the resource on that as we speak. But what we're thinking of is taking the knowledge we learned at Westberg and finding a satellite deposit to support the current deposit at Westberg. And as we mentioned before, Umperville seems to be the #1 target that UEX controls at this very moment in time, and it's only 2 kilometers north of the Westberg deposit. Is hosting the same rock stratigraphy that Westberg's on the southwest portion of the Westberg dome. This is on the northwest portion of the dome, and has exactly the same structural setup that we see at Westberg. Looking at the cross sections, we can see that while this work was done in 1977, when they were looking just for classic unconformity uranium deposits, we're seeing almost uranium and nickel. They did an assay for cobalt back in the 1970s in clearly structured and very strongly altered rocks that have yet to be followed up. In fact, the drilling was incapable back in 1977 of drilling through massive clay altered rocks that you see on the left-hand side. And so holes were lost and abandoned because they didn't necessarily hit uranium. They moved on. What we found is that broad extensions on the right-hand side here, broad extensions of anomalous 0.02% nickel is indicative of being near one of these cobalt deposits. And so we're going to be looking in the Umperville target area this winter with follow-up drilling. So for us, next steps, we're going to be eagerly anticipating results from our MacLean South drilling program that's ongoing as we speak. We'll be testing some stuff in winter at Aurora and North the B trend at Christie Lake and testing the Umperville targets. And we're still, I know we have a lot of people who would like to see us move the cobalt assets out. We're seeing things change in the cobalt markets, but we're not quite ready from an investor point of view to see, while we're actively exploring ways, a simple spin out is a little more challenging because of the institutional support is just starting to come back into the cobalt space. Hasn't been there for most of the last 12 months. We monitor it very carefully, and when the time is right, we'll make a move that will benefit every single shareholder at UEX. So once again, the UEX, we own the premier uranium and cobalt portfolio in the Athabasca Basin. We've got the greatest location that you could ask for from a mining investment point of view. We have a tremendous experienced team that knows what we're looking for. Premier portfolio that spans from grassroots right up to projects ready for development, and a unique understanding of what we're looking for in this part of the world. And with that, I'll wrap up the part of the presentation here and ask that if you're interested in asking questions, please go ahead and do so. Pick the Q&A tab on the Ring Central software, and I'll look at see if there's any questions here that anyone would like to have answered. Right now, not a single question is up on the bulletin board, so please feel free to answer questions. We do have a couple that have come in from other investors who weren't able to attend this morning. So I'd like to call on. I'll call on those questions while we wait for some others to come through the question and answer thing. We have a question here about Christie Lake drill programs have not really expanded the deposit. Could you comment why, and what are our thoughts about Christie going forward? Well, we easily could have drilled holes around the existing 3 deposits and confirmed and been absolutely certain to hit uranium mineralization. But we don't believe that would change the bar, or the we'd have to jump over to hit economic viability within the footprint of the existing deposits. But taking a 20 million pound deposit and turning a 21 or 22 million pounds, probably not yet big enough to turn into a deposit. So our focus has been on looking for new deposits in the same neighborhood, because we know the uranium deposits haven't, the area around outside the uranium deposits that we know them have not been explored very carefully or systematically at all, because of the focus on the deposits. So the program this year, we did find our first sniff of mineralization outside the deposits, and we find that pretty encouraging. The offset at Aurora is really encouraging, and we could have, if money were no object, we would have absolutely blistered the Aurora North with drilling and cover the entire resistivity anomaly, but we don't think that was a prudent way of spending shareholder money. So we dabbled a little bit, proofed the concept, and now we're going to use some geophysics this winter to actually focus, and so that we're looking at something a little more cost effective in the approach. And so that's what we'll be doing at Aurora North. And the same thing with down at the south end at the B trend, where we have our strong alteration in anomalous chemistry. The anomalous chemistry we're seeing above that hole 147 is similar to what we see above the deposits on the Yellowega trend. So that's where we're going to be focusing on. Second question that I have here from the people who weren't able to attend. Can you clarify the process of updating 40th resource assessment with the cobalt nickel at Westberg? Because the drilling has finished a while ago, and it's taken a while. And I won't disagree with you there. We finished the program, got the results, the final results by mid-year. We've been actively working on the new deposit model, 3-dimensional wireframe model, going forward, but it's been in part to do with some of the other things that the team has had to accomplish this year. We are still focusing on trying to get something out here in the next couple of months, and I won't put a firm date on it, but it's not several months away, it's a couple months away at the most. We do believe that, we're asking about what size would be required for a spin out. I'm not so worried about the size of spin out in terms of the value of what may occur for a spin out, and that it would be sustainable. We do believe that proving the concept is a really good first start but we also know that right now the Westberg probably on its own is not quite big enough, but we can find satellite deposits, and that's where our focus will be. But it's really more a market perception of where we're going with the cobalt than actual physical size that would do whatever valuation process or whatever way we could value Westberg through via COEX. That's really the decider. It doesn't necessarily have to be a spin out. It could be a spin out. It could be a partnership. It could be an outright sale. We're exploring all those options. Okay, so moving on to the next questions coming online. Since Cameco holds 50 million shares of UEX, has there been willingness on our part to further evolve your relationship, or involving your relationship further? I think there's always been a very good relationship between us and our largest shareholder. Remember, they're also founding shareholder of the company, but they do struggle right now with their own financial issues related to the downturn in the market. We do talk with them very closely, and we do, in terms of evolving their relationship right now, yes and no. It's kind of hard to explain. They do like what we're doing, and they do like us to be active in the basin, looking at new opportunities that they're not able to follow up on based on their financial situation. But in terms of whether we're going to evolve it, I'm not sure exactly where you're going with the question. But we do talk with them very carefully. We do look at opportunities that we can work together on. Another question, can you provide any further insight to your preliminary talks with Uranium on the May 2020 analytics at Shea Creek? We will be presenting to them the results of what we've determined. We're still sort of trying to refine them into something we have the ideas and the thoughts, but refining them in through May 2020 meeting that we're going to have with them so we can plan a program for 2021. So I think we have a very supportive group over there that's looking at that opportunity, but I think will help with our sort of expertise of understanding these kinds of deposits. Well, we'll be able to show them bona fide targets that they may not see. So it's going to take a couple of months of time through to the end of May to get their support, and then their budgeting cycle is much longer than the juniors. They start thinking about what they want to spend in the following year in late June, early July. So despite the fact that we think we have really good targets here, we've missed their window for 2020 work. So they're looking probably at 2021. Next question. There have been rumors of large consolidations of juniors in the Athabasca Basin. Have you heard anything? Well, of course, that's a very difficult question for us to answer because we've certainly heard lots of rumors and there's been lots of talk. And I can't really comment more than that. It's, with the downturn being as long and as challenging as it has been, that's a very natural thing for juniors to be looking at doing, consolidating things to save costs. There certainly have been lots of rumors. I've heard several of my own and such, but for UEX, the question comes down to what makes sense. Because we sit in a unique part of the market, it's to bring on a smaller junior into our company. I guess the question would be, if we told you we're bringing on the 9th or 10th best product in our portfolio, does it make sense for UEX shareholders? The answer is no. On the other end of the spectrum, on companies that are bigger than us, they're very, very focused on their project development. So there are opportunities out there. I'm sure there are lots of rumors, but it's a lot harder than you might think. Do you expect seasonal strength return this year, as evidenced in the past 10 years? Traditionally, uranium equity markets are at their strength in the first quarter. That's certainly the case. I think when it comes to anything that is external, like a uranium price increase, has to be part of the process to bring strength back to the market. The complete lack of insight or of market activity between suppliers and producers and utilities is certainly causing a pent-up demand situation to occur. And the decision, and I don't think you can underpin how important that nuclear fuel group's decision will be, because quite frankly, industry participants are waiting to see if there are sort of things like supply quotas brought into the United States, because that could change the fundamentals of the uranium market. I think most industry experts expect there not to be the case. So I do believe that you'll start to, when that decision is made, the normal market does return. And I think one of the more encouraging signs you can look at over 2019 is the significant change in the price of uranium conversion. While it's not uranium U3O8 that was sold by uranium suppliers per se, it tells us that people in the utility sector of the world are needing uranium because they are having to buy spot uranium and process it for conversion. And it means that there is demand out there. They've been picking it up bits and pieces on the spot market, but that spot market supply is drying up. It's interesting to note that Cameco has come out and said that in their third quarter that they expect to buy more pounds in the fourth quarter of this year than they spent they purchased already this year through their curtailment programs at McArthur River, and they need to go into the spot market. And so that shows you there's a bit of a pent-up demand and reducing the supply. So we do think it's going to change. The question is the pace and the size. And then, unfortunately, for those people who've been in the industry for a long time, I've heard this story several times. But I do believe that otherwise, without with the change in the Nuclear Fuel Working Group decision, whatever that may be, it will be the catalyst to start at least the return of a regular uranium market, and that will be a benefit to all participants. Next question: do U.S. fuel buyers need to act now to ensure their guaranteed supply beyond 2021? I think if you're a U.S. fuel buyer today, you certainly want to make a long-term deal at today's prices, and that's great if you can. But if you're a utility or a supplier, the last thing you're going to do is lock in long-term prices at a loss. So you might want to act now, but there's certainly no willing buyer or sellers at this point in time. So they are buying bits on this pieces on the spot market, but the spot market is getting really tight, and it's starting to become really tight. So I do believe that they're going to have to start acting now. I think what U.S. fuel buyers are waiting for is that decision out of the section, the working fuel group, because the last thing they want to do is put together a portfolio of long-term contracts that may not necessarily comply with what the rules might be. And I think the risk there is pretty small, but if they can short-term buy off the spot market, which they've been doing over the last couple of years, why would they do that? I think, let's see any more questions pop up. Oh, there's another one. Why should investors put money to work at current levels? A Capital cites this as a top pick. Can you comment on our relationship with them? I think if you were to ask every single uranium company out there right now, and every single broker out there right now, because of the long-term downturn in uranium prices, it's been difficult for them to do more in the uranium space, because the general investor interest hasn't been there as strong as it's been back a decade ago. Our relationship with A Capital is and always has been really strong, although they've just changed their relationship and changed who they cover, because basically they've dumped a whole bunch of uranium names, and unfortunately UEX is one of them. They're only focused on a handful now, so that has changed. But in terms of whether they like our company or not, I don't think that has changed, and whether we can call them and talk to them and ask for help when need be, that hasn't changed. Why should investors not put money in the working career levels? I guess the question you really need to ask yourself as an investor is, do you want to follow your heart, or do you want to follow your mind? If you follow your heart, you're sitting here and going, okay, things have been down for a very long time. I think it's clear that the uranium equity industry has been at the bottom, and been at the bottom for a while. But if you look at the fundamentals that are out there, even the most pessimistic people are talking about the fact that the world's in a shortfall. Even underfeeding is going to be challenged to keep up to its current levels. We're seeing two really big uranium mines the top 10 uranium mines come to the end of their lives here in the next few years, and zero investment in the space. And the last time we saw this kind of scenario would have been in 2004, just before things started to really move. So if you want to use your head and you look at the fundamentals and go, okay, supply shortfall, zero investment in the space. And it takes a decade to bring things into production. When the world sees the shortfall, and when utilities come back into the market and can't buy pounds at these current prices, and things have to shift, where would you want to be? Do you want to be the person or the investor who's in at the bottom and get the maximum increase that's going to come out, or you want to come as we're already on the upturn? And so it comes down to following sentiment or following the fundamentals. Okay, that's the last of the questions I see up here right now. If there's any more questions, I'll give you a minute or so to put them in, if you can. Otherwise, I want to thank you very much for your time. I know it takes a lot of time to sit down for 3/4 of an hour and hear us talk about our company. We do have a phenomenal portfolio. I know it's not necessarily recognized in the market the way we would like it to be, and we're continuing to go away in a measured and responsible manner to try to grow our resources through the additional discoveries, both in the cobalt and in the uranium space. And with that, and there's no more questions, I'd like to thank you very much for your time, and wish you the best of luck with your investments in UEX. Thank you very much.